Hey everybody, my name is Joe Achituro. I'm a CPA, and welcome to myfreecpa.com. I'm going to help you do your taxes. So let's get going. Welcome to your 2018 U.S. Individual 1040. This is your individual income tax return. This was touted as the simplified version of what used to be 2 pages long. And like most government things, when they simplify them, they make them more difficult. So we've gone from a 2-page form to a 1-page form with 7 schedules or 6 schedules. So you telling me if that's easier, but let's get started. As we run through the whole thing, I'm going to cover every section in detail so you understand all the nuances of the brand new form structure. I'm not going to be going over Schedule A, Schedule B, all the older schedules, because I'm going to make separate videos for all of that. This is just really the new 1040 and how it's going to work. This is your 2018 individual tax return. It's changed a lot. It's changed a lot from last year. Last year in 2017, it was 2 pages long. Now it's up to 7 pages long, making it quite a bit more complex when our president claimed it was going to be simpler. So let's take a look. In addition to our regular 1040, there have been 6 schedules added. They are numbered. So normally, we would have Schedule A, B, C, D, blah, 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 all letters. Now, in addition to those, we've added Schedule 1, 2, 3, 4, 5, and 6 to the 1040. Schedule 1 through 6 are supporting schedules for the actual 1040, which is 1 page. So, I mean, he didn't lie. It's 1 page. The problem is he took what used to fit on 2 pages and created a 7-page monolith out of it. So let's take a look. We're going to start with our name. Everything is the same. Social Security number, the name, the address, or our dependents. We still have our dependents. The first thing that's going to change really big is going to be well, first, there are no exemptions. Second, our signature is going to go right on the first page, right in the middle. That, along with our paid prepare. Before, it was on the bottom of page 2. Now it's on the first page, right in the middle. No looking for where do I sign. I think that's a kind of a good change, to be honest, but we'll continue. Let's start with our income. Line 1, W-2 income. Most of us are employees, so our income is on a W-2. Any W-2 wages are going to go here, followed by interest. If it's taxable, it's going to go here. If it's not, it's going to go in this box. Qualified dividends go here, which means you qualify for a capital gains rate. If not, you have an ordinary dividend with ordinary income, it's going to go here. Followed by IRAs, pensions, and annuities that get distributed to you. Those are going to go on line 4B. Followed by Social Security benefits, non-taxable or taxable. All the taxable stuff gets added up and then will be added to, let's make this page bigger so you can see it. Your Schedule 1 item. Your Schedule 1, let's go over the schedules. All right, these 6 schedules have been added. This is 1 through 6, right? So let's take a look at what they actually are. Try to help everybody out. Schedule 1 through 6. Schedule 1, as an overview, is going to be
additional income, capital gains, unemployment compensation, gambling winnings. Schedule 2 is what you owe. You have the additional minimum tax, AMT. That's for usually rich individuals with lots of deductions that are itemized. Excess advance premium tax credits. Now, what are those? The advance premium tax credit is going to be as follows. It's going to be, if you made, this has to do all with Obamacare, right? So if you made a low amount of income in 2017, that qualified you for an advanced premium tax credit, right? That means the government gave you money to buy your health insurance through the exchanges. This year, let's say you made a lot of money. If you made a lot of money, retroactively, you have to pay back that credit that they gave you to buy your health insurance. So you go from making a little bit to making a lot. You have to pay an excess advanced premium tax credit repayment. You have to pay back the excess of the tax credit you wouldn't have gotten had they had known you were going to make a lot of money. I went over that in detail because I think that's important, and that's going to be a gotcha for a bunch of people. In addition, 2018, you still had to have your health insurance. If you didn't have health insurance in 2018, you're still subject to the penalty for not being insured. Now, Schedule 3. This is for non-refundable tax credits other than the child tax credit or credit for other dependents, such as foreign tax credit, right? You make income in another country, whether it's dividends or wages, and you pay taxes to another country, you get a tax credit in the United States for that. That goes on Schedule 3. Education credits, right? You go to college, you get education credits. General business credits, there are a litany of them. If you have any business credits whatsoever, those go on Schedule 3. Schedule 4, owe other taxes, such as self-employment. So you have Schedule C income. You have an LLC where your income flows through to you. You're going to have to pay self-employment taxes on those. That goes on Schedule 4. As well, if you have a nanny or a maid, this is for rich people, and you pay household employment wages, right? You pay those people. You have to pay employment taxes. Those go on Schedule 4. In addition, tax on IRAs and other qualified retirement plans. So you have to pay additional taxes and penalties if you have early distributions. Those go on Schedule 4. Now, what's going to happen with all these schedules is all this information is going to go from these schedules and flow back to the 1040. And you're going to see I've underlined them all for you to see. Schedule 5, a refundable credit. Now, refundable credits are phenomenal because even if you have zero income and zero taxes, but you have a child, the government will still give you money for that child. You'll get a tax credit, which is called a refundable tax credit, which is why everyone should file a tax return, especially people with children, right? If you're on welfare and you're poor and you don't have any income or any job and you have a child, you have to file a tax return. You get money just for filing a tax return. Do this. Other payments, right? Other payments. If you made estimated tax payments, those also go on Schedule 5. And then they carry back over to the 1040. Finally, Schedule 6. Schedule 6 is not usually going to be used too often other than by preparers that get paid or for people filling out tax returns for incapacitated individuals or individuals out of the country. That's going to be the third-party designee, foreign address, right? So if you live in another country, you have to fill out Schedule 6. If you have a third-party designee, which means you want somebody else to speak to the IRS on behalf of you, then you have to fill out this as well. The designee's name, their phone number, their PIN number. They need to be a designee by the IRS, which would give them a personal ID number. Okay? So out of there, let's shut that down. Go back to Schedule 6, which was that. And so there are 6 additional pages added to what was a 2-page tax return. 6 schedules. This is going to make it sort of difficult. And I'd say this year, above any other year, you should definitely consider using tax software or a professional. I almost think you'd be foolish to try this on your own in year 1 without tax software. Right? Second, wait to do your taxes. Don't go to your tax preparer on January 20th and say, I got my documents, let's do my taxes. Chances are tax software is going to have issues. Right? There are a lot of changes that go into effect this year. Odds are tax software is going to have glitches. You want to wait for those glitches to be worked out. You don't want to be the guinea pig. Okay? You don't want to be the guinea pig for a tax software company. So wait. Wait till March. I know it's painful to think about waiting till March. Wait till March 1st. Make sure you have all of your documents. Put them in order. Make sure you have all the ones from last year for this year. Put them in an envelope. Make sure you have all of them. Create a checklist for yourself. Make sure every year you have all your tax documents. So before you bring in your taxes to a professional or you attempt to do them on your own, make sure you have all the documents you need. Second, again, make sure you wait. This year more than any other year, make sure you wait. It's important to wait because if there's an error in the tax software, you're A, probably not going to know. 2, if your tax preparer does find out, you're going to have to file an amended return. So wait to do your personal taxes until March. Let them get the bugs out of the system. Let all the guinea pigs go first. And after all the guinea pigs go and report all the problems with the systems and they fix them, then you get to prepare your taxes. The first time and correctly. That's all I have to say about that. So let's move on. Back to the tax form itself for 2018. So your income goes here from your wages. That all gets added up. Then, on line 6, we're going to total lines from the Schedule 1. Additional income. This used to be on page 1 of your 1040 on the top. It's been moved. It's been moved to Schedule 1. So all of these are going to add it up. Refunds from last year. If you had a itemized deduction last year and you had a refund, that refund now is going to be on line 10, your state refund, not your federal. If you have a state refund, it's going to be income this year to you, and it's going to go on line 10. Alimony received. Your alimony received is going to go on line 11. Alimony is going to change, right? So if you're getting divorced in 2019, this will no longer apply to you. You don't have to worry about this. Any divorce agreements before the end of 2018 go on this line. right? Any amounts paid out to your spouse are going to go here. Or paid to you as the spouse. I'm sorry. Paid to you as the spouse are going to go here. In addition, you're going to get an adjustment for that, for alimony paid if you're the payor, right? That money is going to leave, going to go to the payor, their social security number. And that's only for divorce agreements in 2018 and earlier. If you have an adjustment to a divorce agreement starting in 2019, or you get divorced in 2019, those payments will not be reflected, and those payments are going to be not count towards anything or as subtraction for anything. Those payments are going to basically not exist, and you're just going to claim whatever you normally make on your income. Those newer divorce agreements are going to have adjustments put in for them where it's going to be considered that you are paying taxes on the full amount of your income. Or if you don't have a good attorney, you won't. But hopefully you'll have a good attorney that understands the new tax code. So next, business income, right? Along with your Schedule 1, where the business income is going to go, you're also going to have to put that on. You're going to have to calculate all that on your Schedule C. So now you get Schedule C to Schedule 1 to the 1040. So you have an extra step in there. Capital gains and losses, right? Sales on stock or investment property. Go here. So rental real estate income goes here. Farming income and employment compensation. Right? All that income is going to be added up, totaled on line 22. Going to bring it back to your 1040. Going to be added in this little line here. So this little line plus line 1 through 5B. So you add line 1 through 5B plus line 6 is going to total your line 6, right? 175, 100. Add these plus this, there. Next, you're going to subtract adjustments back to Schedule 1. Adjustments used to be on the bottom of page 1 of your 1040. Now it's on Schedule 1. Adjustments are, if you're an educator, you get an educator expense, $250. That means if you're a teacher, principal. Special performing artists, government officials, reservists, healthcare savings account deduction will go here. Moving expenses, only if you're a member of the armed forces. If you're not a member of the armed forces, you don't get moving expenses anymore. Your deductible portion of your self-employment. So this person's self-employment tax was really double this number. So you take half of it gets adjusted to your income. It gets subtracted. A qualified plans for your Schedule C or your other self-employment income. Qualified retirement plans. Self-employed health insurance deduction. Penalties that you may pay from withdrawing from savings accounts, from banks. Right? Again, the alimony only before 2018 agreements, 2018 agreements and earlier. Any IRA deductions, student loan interests that you pay are going to go here. Those are going to be $20,000 for this particular taxpayer, $20,400. So all these add up, go on line 36. Here's where it gets tricky. That $20,400 is the difference between 175 and 154. Okay? So what this is the 175 less the adjustments from Schedule 1, 20,400, which are going to give us a net of 154,700. That's still our adjusted gross income. That's going to go on line 7. Remember, adjusted gross income, line 7. Used to be at the bottom of the first page, was simple. Now it's on line 7. Next, are we going to take a standard deduction or an itemized deduction? Well, the standard deductions have gone up substantially. So if you're married, you get $24,000. If you're single, you get 12. If you're head of household, you get 18. This person is head of household because they're a single individual taking care of a child, which means they're $18,000 right here. Head of household 18. They're going to use their standard deduction. Qualified business income. Qualified business income deduction is going to be, this is the simplified form, right? This is going to be simple. I have a whole video that's going to go out just for this QBI, qualified business income deduction, because it can get complicated once you get over certain income thresholds. But for most of you, you're not going to be subject to this. 99% of you will not be subject to any of the limitations. So what'll typically happen is you're going to get 20% of your LLC income, your Schedule C income, which is in this case $100,000, right? So on the $100,000, you're going to get a $20,000 deduction. 20%. I left that at 100 to be easy, so you could see it's a 20% of that Schedule C number. So now here's where we go from adjusted income, adjusted gross income, subtract our standard or itemized deductions. If it's itemized, it's Schedule A. If it's standard, we use the numbers here. Subtract again. If we have a Schedule C income, we subtract out our business income deduction, which is 20% typically, again, generally, 20% of our net income amount. That gets us to 116,000. So you take that 154 less 18 less 20 gives us the 116. From there, from that 116,700, we're going to calculate our tax using the graduated tax schedule or the SAL. All the software will do it for you. Okay. Next, add any amount from Schedule 2. Now, what's on Schedule 2? Nothing. But we do have our repayment, our alternative minimum tax, right? So our repayment for our premium tax credits. So if we were poor last year but then rich this year, we have to repay those taxes. That goes on Schedule 2. So in this case, this man had none of these things. This taxpayer had none of these things. So we're not going to add anything from Schedule 2. And so the total amount is going to be the $20,906 and would have been added by what's on Schedule 2, but it's not. So $20,906. That's the tax we owe before credits. Next, we have a child. So we have a child tax credit of $2,000. There are limitations to this. I will go over those in child tax credit videos. In addition to the child tax credits, you have Schedule 3. Schedule 3 is additional credits, right? So foreign tax credits, if we pay credits to a foreign government, if we pay daycare, if we have education credits because we're going to college, if we're under a certain income and we contribute to a Roth IRA or a regular IRA, we get a retirement savings contribution credit, right? So imagine that you get money for giving away, for putting money towards retirement. The government will reward you. A residential energy tax credit, new windows that are energy efficient, a new boiler that's energy efficient, water heater. We get credits for these. These are non-refundable credits. This means they can only bring your tax liability to 0 and not below. Excuse me, I'm getting over a cold, so I have a really dry, scratchy throat. And I'm trying to do this video in the middle of December in New England. So let's take it. We have the $2,000. We have the $600 from Schedule E. That gets added. So now we have a $2,600 tax credit. So subtract that 2906, which was what our tax bill was going to be, from the 2,600, and leaves us with 18,306. That's a tentative tax, right? It's not our final tax, because we may have other taxes, because we have Schedule C income or self-employment income, which is going to go on Schedule 4. So back to line 14. These are going to be adds, right? We're going to add more taxes. Schedule 4. Let's go back to Schedule 4. Self-employment tax. You have to add Schedule SE for self-employment. There's a whole schedule to figure that self-employment tax out. That number is going to go from Schedule SE to Schedule 4 to Schedule to the 1040. Okay? But that's going to be calculated here. So we have our 9,300 of self-employment tax. Any unreported Social Security Medicare tax, additional taxes for distributions before we're supposed to distribute our money for our retirement accounts. Household employment taxes, which are taxes that are going to be for if you pay for a nanny or maid, you have to pay that person taxes. We have to pay that person's employment taxes. Those taxes are going to go here. Repayment of a first-time buyer credit, all that stuff's going to go here. Healthcare, individual responsibility. Like I said, this person didn't pay their health. They didn't have health insurance in 2018. So in 2018, you still have to pay that. This is your individual responsibility tax penalty. They call it a tax. I call it a penalty. It's a joke. You pay a penalty for not having insurance. That's kind of insane to me, for not buying private insurance. I don't know how that ever passed, but it did. So 3,418 is the penalty. All right, so we're going to add all these up. These are going to total 12,718. That 12,718 from line 64 is going to get brought all the way back here. 12,718. Those are additional taxes. So you're going to take the 18, which was our normal bill, add the self-employment in the that other tax for the health insurance that we didn't have. That's going to bring us to our total tax of $31,000. This person had $8,000 withheld from their W-2. So that's going to subtract 31 from 8. That's right. So you take 31, subtract 8. Line 5. This is going to be estimated tax payments. So this guy, he knew he was going to make a lot of money. So he made $20,000 and he put that on Schedule 5. Schedule 5 is estimated tax payments and amounts applied from 2017. What else is going to go on this line? Line 75 is a total, right? So what could also go here is if you had low income and you paid for health insurance, you get your tax credit. That goes here, right? Any extension of payments here. Federal tax credits on fuels if you are a trucking company. Any other tax credits, they're all going to go here, right? So you're going to have all these credits that are refundable and other payments and refundable tax credits. So these are going to bring your taxes below zero. So if you had a zero tax liability instead of $30,000, so you owe the government zero, these taxes would bring your tax below zero, which means the government would end up owing you money. And that only makes sense, right? So if I had only a $10,000 worth of a liability, but I gave the government an extra $20,000, of course I'd get an extra 10 back, right? So 10 minus 20 is 10 left over for me. So we have a 20,000. All these lines would add up to 20,000. Go back to Schedule 1040. Go back to our 1040. That's going to see Schedule 5. It's going to carry over to here. So we're going to take our 31 minus 8 minus 20. So the minus 8 minus 20 are going to get added up and do 28, right? So 8 plus 20, 28. Minus the 31 is going to give us our net we still owe $3,000 in taxes. Whew! And that are the major changes just to the forms of your new tax return that was supposed to be easier and in the end ended up being way more difficult. So good luck with that. Again, I suggest using tax software. There are going to be links to tax software. I'm making these videos for free, but I'm going to put a link to some tax software where I'm going to get, I'm not going to lie about it, I'm going to get paid for referrals. So please use the link below to do your own personal tax returns. I'm also creating on myfreecpa.com. I'm going to organize all these videos. I'm putting these videos on YouTube. On YouTube, they're going to have commercials. On myfreecpa.com, there will be no commercials. You will also be able to organize just the videos you need. So you'll take the videos you need, you'll subscribe to them on myfreecpa.com, and every year you go back, you can add videos that pertain to you, take away videos that don't pertain to you, and they will be there for you to watch. Any updates, I will add to that website, add to those videos, so you don't have to worry about resubscribing to changes in tax code. I will do that for you throughout the years. Okay? The only thing you need to do is sign in, create a user login. Once you do that, everything will be set up for you. You go in, you subscribe to the courses you want. The courses will be set up in two separate categories. So one will be the general rules, where I sit and I will explain the rules. If you don't want to learn the rules, you go to the second part of each course, where I show you how to use the links to the tax software, and I will show you exactly how to put in the data into the tax software to get the proper results. All right. So again, the link will be below. The links will also be on myfreecpa.com. All right. And the software I use is the individual version of the professional software that I use on my practice. So I trust them. I trust their calculations. They're usually voted most accurate tax calculations. And because of how they set up their system, and if you use my courses, we can get through your tax return quickly, efficiently, and with pretty much without any error. So again, I see all these extra schedules. These go from Schedule C to Schedule 1 to the 1040. Everything flows. There's a lot of flowing back and forth. I recommend this year, again, using tax software. Please use tax software this year. Even if you don't ever use it before, use it this year. Because there's a lot of differences, a lot of changes, things where you would think that you would normally get a deduction where you're not going to get a deduction this year for. There are limitations to everything. Lots of traps to fall into. Please use tax software this year. And again, if you want to know more about the tax code and other accounting and finance and economic stuff, that I'm going to be putting up videos throughout the year on myfreecpa.com. Have a good day, and thanks for watching. Thank you once again for watching this video. Don't forget to subscribe. Don't forget to click notifications. On My Free CPA on YouTube, you're going to have a link to myfreecpa.com. On here, I would encourage you to sign up, get yourself an account, because you're going to be able to save all the courses I put that are relevant to you. And you're going to be able to go back and reference them year after year after year. In addition, there's going to be a do your own taxes link. This is going to be free online tax software if your income is below a certain threshold. It's basically just like TurboTax or H&R Block online taxes, but cheaper, right? This is the professional software I use, put online for individuals. I'm going to be using this software in most of my videos to explain to you how to do your own taxes. So if you want to sign up for this, please use that link. And when you use that link, I get credit, right? If you're going to do a tax return that's going to cost you some money to prepare using the tax software, because again, not all tax software is free depending on your income levels and your other circumstances, I am going to get some credit and get paid for this so I can keep putting up this videos for you. Thanks once again, and have a great day.